When you buy a stock and you realize you're buying a business and the fundamentals haven't changed, then you're gonna buy more shares as the stock goes down. Are you a speculator or are you an investor? Nikola stock is down over 99% from its all-time high. Guys, I'm gonna show you the things that the other YouTube hypesters were saying about Nikola 3 years ago and what I said about Nikola 3 years ago. Just take a look at this and then I'll come back.
This was so obvious because they had no revenue and it was all on hype. They got the partnership with GM. You see the collapse here. Guys, keep in mind, the GM partnership was just dissolved like recently and it still was down a lot. It got back up to 35 and then collapsed again. Now it's in half in the last week. Guys, this is not shocking. Could I have guessed this? Yeah, I probably said it wasn't going to do well. Did I think it was going to happen this fast? No, I actually thought it was going to take longer than this. But we see the same thing happening with NIO. We see the same thing with Tesla. And everybody says, but it's the future. It's the future. Guys, this is the future. Why not anymore? Oh, because GM doesn't. Somebody sits and say, well, Paul, you don't get it. GM. That's the point of investing, guys. In investing, you have to look at the possible outcomes and assign chances of them happening. Nikola's entire business was based on this partnership with GM. So you're going to go give it a value of $30 billion, Ford's value, by the way, just based on a partnership potential with another manufacturer. Please tell me that rings to you about why that's ridiculous. You might tell me, well, it's electric cars. It's different. It's not technology. It's cars. That's all it is. GM, all these car companies know how to make electric cars. They are working on electric cars. Chevy and GM have had an electric car. So I don't want to hear that it's about the technology and it's a technology company. It is not. It is a car company. And their entire existence was based on GM. That's a problem. Whenever you have any sort of business that's relying on one source, that's a concern and you should be worried about that. Hence why the stock is now down 80%. In the last year, the trailing 12 months, they've done $150,000 in revenue. You've done more in revenue than Nikola.
Come on.
Nope. Hey, guys, question. Are you worth $6.6 billion?
Gosh, that's just shocking.
But do you see my point there? I'm not saying Nikola's worth zero, even though you can make the argument they're worth zero. You can make a really strong argument they're worth zero. I'm just sitting there saying it's not worth $6.6 billion. That's my point. The great thing about being an investor for me is I look at the current price, I look at the current value. If there's a difference where the price is above the value, I don't buy. If it's the other way around, I buy. It's that simple. Now, the hard process is determining the value because there's a lot of inputs and assumptions you have to make. But the whole point is the great thing about Nikola and Tesla and all these other companies, I don't have to go any further than, oh, market cap of 6.6, revenue of, yep, pass. That's simple. Don't care. Guys, in major bull markets, there's going to be more fraud. That is a big indicator of exuberant markets. That's just the way it is. Nikola was an EV stock. Everybody thought this thing can't fail. Got 80. I think intraday got to $90 a share, and now it's at 13. We made a video back in December, and it was at roughly $18, $19 a share.
Yeah. It got as high as $93.99.
$94 a share, and now it's at $13.21. We made the video after they lost their GM contract. Guys, they hadn't even lost a GM contract yet. They went from 94 down to 18.
Exactly. And how stupid were we at $93.99?
Yeah, we were told we were stupid.
Yep.
You're missing out. It's the hype. It's the future. Do you hear anybody talking about Nikola now?
Yeah, why aren't you buying the dip?
The only thing I saw in Nikola today was Wall Street Journal saying that the CEO has been indicted on fraud charges for misleading investors.
Allegedly, of course. And this is the same thing that happened for Lordstown. These people are propping up their numbers about how they can make their vehicles, how many pre-sales they have.
Yep.
I guess we've been telling you all along, and you've been telling us we've been stupid for 3 years about being careful with this explosion of the IPOs, the SPACs, all these EV companies that don't make anything, pre-revenue companies.
Yep.
We've been saying it, and sure enough, it's still coming to light, Paul. It feels good sometimes to be somewhat in the right with this.
Correct.
When everyone else is just...
If you're new to this channel, I'm not here trying to say I'm not going to have mistakes. I absolutely will have mistakes. I absolutely will buy stocks that go down. Here is the difference. We told you, if you see those videos, we told you there were no long-term fundamentals in Nikola, and it was a highly speculative play. We criticized the belief in just looking at a stock price going up and saying because of that, it meant the stock was great. We criticized that beyond belief. There's so many things that can go wrong in startups. We absolutely urged everybody to be very, very careful. It was a company that was valued over $30 billion. It's now $300 million. We absolutely, guys, I am going to have stocks go down. The difference is when you buy a stock and you realize you're buying a business and the fundamentals haven't changed, then you're going to buy more shares as the stock goes down. Every value investor believes this. Every successful long-term investor believes this. So you have to ask yourself one question. Are you a speculator or are you an investor? Are you somebody who's making decisions based on this and FOMO, fear of missing out? Or are you making decisions based on the fundamentals of the business? Nikola had no fundamentals. Let's go look at the income statement back then. Guys, they had $400,000 in revenue and they're valued at $30 billion plus dollars. $37,000 in revenue next year. They actually have $60 million in revenue right now, and guess what? They're sitting here. I don't get this. I don't understand this. Is that even accurate? They have 60 million in revenue. This is our data feed. Let me go to annual. When there are no fundamentals and everything is built pie in the sky, you have issues. When the average car company is selling for 0.5 sales, in order to justify $30 billion value, you have to have 60 billion in sales. We were like, wait, this makes no sense. And guys, this isn't the only one. Workhorse, Neo, all these other ones we sat there and said, be careful. And all those hypesters were like, oh, I will be wrong in the future. I've already been wrong a few times. But when I find a company that has good fundamentals and the stock price goes down, I am cheering. I am absolutely excited. That's not happening here with Nikola. And those hypesters are not doing that here. And that's the point that we're trying to make, guys, as a company. A multi-bagger is a company that's gone up several times. A 10-bagger would be 10x, a 100-bagger would be 100x. We have read a book recently about finding multi-baggers, and a lot of great value investors will tell you that the best way to do well in investing is to find great companies that can grow and become those huge multi-baggers. So how do you find them? Well, join us for our webinar next Wednesday, June 14th at 1 p.m. Eastern Time. We're going to go over this entire process on how to find appropriate multi-baggers and how to take advantage of them. You won't want to miss this. Come check it out next Wednesday. Sign up at the link below next Wednesday, June 14th, 1 p.m. See you there. As a YouTube channel, we're believing in teaching a process. And that process is based on two fundamental things. One, when you buy a stock, you're buying a piece of a business. And two, that every investment is the present value of all those cash flows in the future. So for example, just explain that second one for those of you who might be confused. If I were to tell you that I was going to give you $1 a year for the rest of your life, what would you pay me for that? Let's say you think you're going to live 60 years. Would you pay me $100? Of course not. You're only going to get 60 back, and it's going to take you 60 years to get it. Plus, you have to worry, can I actually pay? Will I survive? Is my credit good to be able to pay you? All these factors. Would you pay me $2 for that? Probably. You're like, listen, I only have to get 2 years out of this thing, and I'm break even. That's the whole point. It's no different than looking at a company. You have to assess what you think the company's going to make in the future. With Nikola, we had no clue what it was going to make because they had no fundamentals to back it. Look at this. They had their annual revenue, they had $95,000 in revenue back in 2020. They had $480,000 the year before. Guys, come on. Come on. What are we doing here? And then everybody made fun of me like, oh, you don't get it. You don't get it. Really? That's interesting. I don't get it. I don't get that when you buy a stock, you're buying a piece of a business. Now, guys, our process was built exactly for this. And we're trying to teach that process. And we warned, and I got ridiculed. And guess what? Like I said, on Twitter and Instagram now, I don't get any messages anymore saying, you were wrong about this, you were wrong about this. Am I still going to be wrong about things? 100%. The best investors of all time aren't even right 60% of the time. But the key is, if you have the right process, just like in baseball, if you have the right the best hitters of all time averaged over 400 over a few years of their career, not even a full year career. That's 60% of the time they didn't even get a hit. That's the key, guys. That's the great analogy to investing. To be one of the best ever, you don't need to bat 500. Just that when you're right, it really takes care of itself. When you're wrong, it's very limited. That's the key. As Monish Pabrai says in his book, The Dando Investor, heads I win, tails I don't lose much. That's the big key. And when you buy good companies with good fundamentals, then your downside is probably not very bad. But it takes the hard part is the emotional side of staying true to yourself and following the fundamentals no matter what the market's saying, whatever CNBC is saying, whatever your friends are saying. I'm the opposite of FOMO. When I see people having FOMO, it's an immediate red flag for me. I go, I'm out. It doesn't even, probably to the point of I should probably tailor that back a little bit. I assume if average people are telling me something, it's automatically a bad investment. I am absolutely programmed that way, and I want you to get there as well. And it does take time. I look at my progress over the last 2 or 3 years, and it's changed dramatically in how I'm trying to invest for myself. Mostly because I realize how lazy I am. I do not want to do the nitty gritty, interviewing suppliers, interviewing ex-employees, etc. I want to find great companies and buy them for great prices. Now, people would say, well, Warren Buffett says buy great companies at good prices. To me, buying a great company at what the market would perceive to be a good price is a great price. That is my key. Now, does that mean I don't take investments? I don't make investments in speculative plays? Yeah, I have a play right now in Intel. Don't go buy Intel just because I am. It's a very, very long-term play. And I could very well be wrong, and that's why my position is not very big. But that's a big key for me. I'm going to take more risks on some investments that are turnarounds, but I properly manage that risk by not having a big position. That's the big key here, guys. We're trying to teach a process. The big key for you is you will find a process that works for you after listening to our process, after listening to other people in our community's process. Everybody has a different process. Everyone has a different process. But just remember, stocks in the short run are a voting machine. In the long run, they're a weighing machine. What that means is, in the short run, what's going to happen is based on popularity. In the long run, based on fundamentals. That's why you look at many, many stocks from 2000 who still have not reached their all-time highs yet from 2000, 23 years later. Because back in 2000, this was going on. And they had good fundamentals. They had growing businesses. But it's possible to overpay for a good thing. And we're trying to teach you now how to tailor that back and make sure you stay close to home and realize that you don't have to chase hype. Just think differently. So guys, if you like this message, I want you to do 2 things for me. I want you to subscribe to the channel, and I want you to share this video with somebody else. I appreciate your time.